Welcome to this comprehensive guide on long-term cryptocurrency strategy. In this video, we'll explore how to build sustainable wealth through strategic cryptocurrency investment. Cryptocurrency has evolved from a niche technology into a legitimate asset class that offers unique opportunities for wealth building. However, success in this space requires more than just buying coins and hoping for the best. It demands a well-thought-out strategy, patience, and a long-term perspective. Whether you're completely new to cryptocurrency or looking to refine your approach, this guide will provide you with the foundational knowledge needed to develop a robust long-term investment strategy. Let's begin this journey toward building lasting wealth in the cryptocurrency market. Long-term crypto investing is a strategy focused on holding cryptocurrency assets for extended periods, typically 1 year or longer, with the goal of building wealth through appreciation. Unlike day trading or short-term speculation, this approach is about patience and conviction. The core principle is simple. Instead of trying to profit from daily or weekly price movements, long-term investors focus on the fundamental value of the cryptocurrencies they hold. This means evaluating the underlying technology, the team behind the project, real-world use cases, and adoption potential. The key advantage of this strategy is that it shifts your focus away from short-term price movements, which can be highly volatile and emotionally draining, and toward the long-term growth potential of the cryptocurrency ecosystem. By adopting this mindset, investors can avoid the stress of constant market monitoring and reduce the emotional decisions that often lead to losses. Successful long-term cryptocurrency investing rests on 4 core principles. First is research first. Before investing a single dollar, develop a deep understanding of blockchain technology and thoroughly analyze project fundamentals. This means reading white papers, understanding the problem a cryptocurrency solves, and evaluating its competitive advantages. Second is time horizon. Long-term investing requires patience to hold through market volatility and cycles. Cryptocurrency markets are known for dramatic price swings, and having the patience to weather these storms is essential. Third is strong conviction. Confidence in your selected assets, based on thorough analysis, helps you stay committed during market downturns. When you truly understand what you're investing in, temporary price drops become less frightening. Fourth is clear goals. Define your wealth-building targets and exit strategies from the beginning. Know what you're trying to achieve, whether it's saving for retirement, building wealth for your family, or achieving financial independence. These principles form the foundation of a disciplined investment approach. Diversification is one of the most important risk management tools in cryptocurrency investing. A well-balanced portfolio typically follows this allocation model. Allocate 60 to 70% to blue-chip cryptocurrencies like Bitcoin and Ethereum. These are the established market leaders with the longest track records, strongest communities, and highest levels of institutional adoption. They provide stability and serve as the foundation of your portfolio. Next, allocate 20 to 30% to mid-cap altcoins. These are proven projects with growth potential that have demonstrated real-world utility but still have room to appreciate. They offer a balance between risk and reward. Finally, allocate 10% to high-risk, high-reward investments in emerging projects and innovations. This portion of your portfolio is where you can take calculated risks on newer technologies and projects that could deliver significant returns, but understand that some of these investments may fail. This diversification strategy helps balance potential returns with manageable risk, ensuring that no single investment can devastate your entire portfolio. Dollar cost averaging, commonly abbreviated as DCA, is investing a fixed amount at regular intervals regardless of the cryptocurrency's price. For example, you might invest $100 every week or $500 every month into Bitcoin, no matter whether the price is up or down. This strategy offers several powerful benefits. First, it reduces the impact of volatility. By spreading purchases over time, you avoid the risk of investing all your capital at a market peak. Second, it removes emotional decision-making. You don't have to worry about whether now is the right time to buy because you're buying consistently regardless of market conditions. Third, it averages your purchase price over time. When prices are high, your fixed amount buys fewer units. When prices are low, the same amount buys more units. Over time, this tends to result in a favorable average purchase price. Fourth, it's an automated and disciplined approach. You can set it up once and let it run, which makes investing systematic rather than emotional. Dollar cost averaging is particularly valuable for beginners who may feel overwhelmed by market timing decisions. HODL, which stands for Hold On for Dear Life, originated from a misspelled forum post and has become one of the most recognized terms in cryptocurrency culture. The HODL strategy is straightforward. Buy quality assets and hold them through all market cycles, regardless of short-term price fluctuations. This approach has 4 key elements. First, buy and hold quality assets through market cycles. This means identifying cryptocurrencies with strong fundamentals and holding them for years, not months. Second, ignore short-term price fluctuations and market noise. News headlines, social media hype, and daily price movements should not influence your decisions. Third, capitalize on long-term adoption and growth trends. The HODL philosophy is rooted in the belief that cryptocurrency adoption will increase over time, driving prices higher in the long run. Fourth, this strategy requires strong conviction and patience. There will be moments when your portfolio is down significantly, and the temptation to sell will be strong. HODLers maintain their positions through these challenging periods, trusting in their initial analysis and the long-term potential of their investments. This strategy has proven successful for many early cryptocurrency adopters who held through multiple market cycles. Effective risk management is absolutely critical in cryptocurrency investing. Here are 4 essential risk management principles. First, only invest what you can afford to lose. Cryptocurrency is a high-risk asset class, and you should never risk essential funds like your emergency savings, rent money, or funds needed for daily expenses. Only invest discretionary income that, if lost completely, wouldn't impact your quality of life. Second, prioritize secure storage. For long-term holdings, use hardware wallets, which are physical devices that store your cryptocurrency offline, protecting it from online hacking attempts. Never leave significant amounts on exchanges for extended periods. Third, set stop-loss levels. Define exit points to limit downside exposure. While long-term investors generally hold through volatility, it's wise to have predetermined levels where you'll reconsider your position if a project fundamentally changes or if you need to cut losses. Fourth, avoid overconcentration. Don't put all your capital into a single cryptocurrency, no matter how confident you feel. Spreading risk across multiple quality assets protects you if one project fails or underperforms. Remember, even the most promising projects can face unexpected challenges. Proper risk management ensures you can stay in the game long enough to benefit from successful investments. Before investing in any cryptocurrency, thorough evaluation is essential. Here are 5 key criteria to assess. First, look for a strong use case solving real-world problems. Ask yourself, what problem does this cryptocurrency solve? Is there genuine demand for this solution? Projects with clear, valuable use cases have better long-term prospects than those based purely on speculation. Second, evaluate the team. An experienced team with a proven track record is invaluable. Research the founders and developers. Have they successfully launched projects before? Do they have relevant expertise in blockchain technology, business, or the industry they're targeting? Third, assess active development and regular updates. Check the project's GitHub repository to see if developers are actively working on the code. Projects with consistent development activity demonstrate commitment and progress. Fourth, examine growing community and adoption metrics. A strong, engaged community often indicates genuine interest and support. Look at social media following, developer activity, partnerships with established companies, and actual usage statistics. Fifth, ensure transparent tokenomics and governance. Understand how the cryptocurrency's supply works, how tokens are distributed, and how decisions are made within the project. Transparency in these areas indicates a legitimate, well-structured project. Taking time to evaluate these criteria helps you identify quality investments worthy of your long-term commitment. Beyond simply holding cryptocurrency, there are several strategies to maximize returns on your long-term investments. First is staking rewards. Many cryptocurrencies allow you to stake your holdings, which means locking them up to help validate transactions on the blockchain network. In return, you earn passive income in the form of additional cryptocurrency. This can significantly enhance your returns over time while supporting the network's security and operation. Second is yield farming. This involves generating returns through decentralized finance, or DeFi, protocols. You can provide liquidity to decentralized exchanges or lend your cryptocurrency to earn interest. However, yield farming carries additional risks and requires more knowledge, so research thoroughly before participating. Third is portfolio rebalancing. Periodically adjusting your portfolio allocations ensures you maintain your desired risk profile. As some investments grow faster than others, your portfolio can become unbalanced. Rebalancing involves selling some of your winners and buying more of your underperformers to return to your target allocation. Fourth is compounding. Reinvesting profits and rewards accelerates growth through the power of compound returns. Rather than withdrawing earnings, reinvest them to purchase more cryptocurrency, which then generates additional returns. Over years, compounding can dramatically increase your wealth. These strategies, when implemented thoughtfully, can significantly enhance your long-term returns beyond simple buy-and-hold approaches. Let's review the essential points for successful long-term cryptocurrency investing. First, long-term strategy requires patience and conviction. Building meaningful wealth through cryptocurrency isn't about getting rich quickly. It's about consistent, disciplined investing over months and years. You must have the patience to hold through market cycles and the conviction to stay committed to your strategy. Second, diversification and dollar cost averaging reduce risk exposure. By spreading investments across multiple quality assets and investing regularly over time, you minimize the impact of volatility and reduce the chance of poor timing. Third, focus on fundamentals, not short-term price action. Daily price movements are largely noise. What matters is the underlying technology, adoption trends, team quality, and real-world utility of your investments. Fourth, secure storage and risk management are critical. Protecting your assets through hardware wallets and managing risk through proper position sizing are non-negotiable aspects of successful investing. Fifth, stay informed and adapt to market evolution. The cryptocurrency space changes rapidly. Continue learning, stay updated on developments in your investments, and be willing to adjust your strategy as the market matures. By following these principles, you position yourself for long-term success in cryptocurrency investing. Thank you for watching, and best of luck on your investment journey.
If you like this video, hit that like button and don't forget to subscribe. Visit CodeLucky.com for more such useful content.